Right, so welcome back to Coffee Cafe. We have one more day to journalize. All right, so here we are finally on the 14th of June. Okay, so it says here that we went to pick up the advertisement flyers, okay, from city printers. Okay, and the total bill for the flyers was $100. Okay, plus minus the down payment of $50. So we're gonna pay the rest of the $50 with the business credit card. Okay, and here is the transaction. So let's go ahead and journalize because we picked up the actual advertising flyers for $100. Okay, so in this case, because we made a down payment or we have a prepayment, right? We're gonna apply that against the invoice. So in this case, right? Since we're paying at time when we pick up, we need to recognize this, okay? So in this case, advertising expense, because that's what we bought. Okay, and because we are when we first met with city printers, they required a down payment. They didn't make us pay the amount of advertising flyers first. They made us pay the whole thing at time of they made us pay at time of sorry, hold on. So when we first met with city printers, they didn't make us pay for the advertising. They made us make a down payment. It required us to pay upon in full when we pick up the flyer. So in this case, right, when we first originally journalized this transaction, we only journalized that we made a prepayment. So in this case, now that we're picking up the flyers, right, we're picking up $100 worth of advertising flyers. So in this case, this is why we have to recognize the expense. And now we're going to apply the voucher or apply the prepayment. And of course, we paid with a Visa credit card. Okay. Okay. So in this case, right, we paid $50 for the down payment, and we have to pay the remaining $50 that we owe to give us a grand total of $100. Okay. And of course, this one, we have everything that we need. So you could go ahead and say city printers. And you can say you picked up 2,000 flyers. And it doesn't look like there's an invoice number, so in this case, that's all we need. Okay. So then now we can put this in our ledger since we have a couple accounts that are affected. So first one we have that is affected is going to be our expense account. Okay, so operating expenses. we have here. First one is advertising expense. The 2,000 flyers at 0.05 cents each. Okay. General journal. We are now on the fourth one. And this was for $100. So therefore, 85 plus 100 gives us a total of $185. Next is the prepaid account. Okay, so in this case, we're going to apply the down payment. So here we go, miscellaneous, here you go. That's goodwill, deposits, prepaid accounts right here. Okay, we're going to apply okay, which is going to decrease my accounts, prepaid accounts, back down to 665,417. Okay, because we're redeeming our voucher or our down payment. So we're going to credit the account, which will decrease it to 66,5417. Okay. Last thing that we did was we used a Visa payable to pay for it. So here you go, Visa credit card. Another city printers. Right, 2,000 flyers. Remaining balance. So now, right, we increased our liability because now we owe the credit card company $185, right? And of course, last but not least, since we dealt with a vendor, we have to go see city printers to ensure that we made a payment and we picked up the flyers. And I'm going to make sure that I make a note that I paid with the Visa credit card. No invoice number, but general journal 4. No terms because we paid at time of service. Here, I'm going to recognize that I had a prepayment. The total bill amount was $100, and I paid with the Visa credit card of $50. So therefore, right, it should say that I owe $0 because in this case, the formula is I started out with $100 because I had a down payment. I had it decreased it by $50. Then I paid it with a Visa credit card, which acts like as if I paid it in full. I paid it with $50, so now I owe city printers nothing. Okay. All right, so now we're done with that transaction there. Okay. So then let's go ahead and see what happened next. Then we went to purchase from restaurant supplies. We purchased 1,000 medium cups, coffee cups for 5 cents per cup, which gave us a total of $50. And then we bought 1,000 large cups, which charged us 7.5 cents per cup. Okay, so it gave us a total of $75. Now, of course, we have tax of $10.31 to give us a grand total due $135.31. And I paid with a business credit card. Okay, so in this case, I bought some coffee cups. Okay, now in this case, is coffee cups going to be part of my inventory?
Yes,
Why do you think so?
because that is something that you gotta keep in check or something like that.
Mm, we are going to keep in track of it, but in this case, um, do we really need to keep track of every single cup that we use in this kind of um, way? Is it much more easier to, do we have to keep track of it? Is it something that we must keep track of?
No, not really.
No, not really, right? Our main, are we in the business of selling cups?
No.
We're in the business of selling coffee, right? So in this case, these coffee cups, right? They're expendable, okay? Right? We use them, we throw them away, we drop them on the ground, we got to throw them away anyway, right? So in this case, right, what would be a better way to kind of look at this? Use your chart of accounts. They'd be a business expense, right? But what I'm going to have you guys do too is at the end of the accounting period, which is at the end of the month, I am going to have you do keep track of how many cups you sold, because at the end of the day, it's going to be part of the cost of materials, right? It's part of the cost of the product that we sell. However, in this case, I don't care to keep track of it very, very close. Okay? Because coffee cups, they come and go, right? In this case, I can look in the shelf and be like, well, if I use this many cups, then I need to go run it, get some more. Sugar is similar, right? You look at how many bags that you buy, and if you keep using it, you'll know exactly how much. You don't need to keep track of it, um, like per pound. Like you don't need to keep track of it by every tablespoon I put in there, right? So in this case, right, I'd rather use it as a business expense, and we will adjust our um, items accordingly, but not as inventory, right? This isn't, we're not going to sell the coffee cups per cup, right? We're going to sell it as part of the cost to create a product, okay? And that's going to be calculated at the end of the month. So in this case, I'm just going to recognize that I acquired some business supplies, okay? So in this case, I have medium coffee cups for 11,760 and a large coffee cups for 11,765. And how did I pay?
Visa.
Yes. I paid with a Visa credit card. Okay. Now in this case, right, I paid a grand total of $10.31. Now what do I do with this tax? I'm sorry, I paid for the total amount to be $135.31. So then what do I do with this tax of $10.31?
It is cost to the divide between two items
How? How do I divide it between two items?
because it is 1,000 cups of 50-50.
You never do tax based on quantity.
Okay. Means on money, means for the medium, I think 40%, and for the large, 60%.
Okay, in this case, no, you never split it up that way either. How do you split tax? When you go to the store and you buy one item, what happens?
It's calculated for just the one item.
You just calculate it on just one item. But if you were to buy 10 items, how would you calculate tax?
By the sum.
As a sum, but at the end of the day, they're all going to be taxed individually. It's just because you have a lump sum number, right? You get taxed less because you have more items and you have more of a dollar per dollar amount, and you're only taxing the actual amount of sales. You're not taxing based on quantity. You're not taxing based on the selling price, right? You're calculating based on what the total sales of that item is. So in this case, we have to prorate. Okay, so no 40%, 60%. This one you have to actually take the $50 and multiply it by the 8.25%. Right? It's prorated, meaning you're gonna tax every item as an individual level. So in this case, if I have $50 for my medium cups and I have $75 for my large cups, what happens if I multiply that by 8.25%? Then I have 54, 54.12, and I have 81.18. Now let's take a look at this. I can only round one because in this case, I'm going to be creating a penny out of nowhere, right? In this case, I'm at 10.30. I'm at 10.30, but if I round up both of them, I'm going to end up with 10.32. Okay? So in this case, which one would be the most likely that you're going to round up versus the other?
Large coffee cups.
You would definitely do that because it's 1.875, right? That's 3/4 of a penny versus half a penny, right? So in this case, that is exactly what I'm gonna do. I'm gonna round this number, so it's gonna be $81.19 versus the other one, we're just gonna stay the same. So 54.12 to give you a grand total of $135.31. Okay, so in this case, I have to take a look at the penny difference here and not to round up on both sides. All right. I have here restaurant supplies. I purchased 2,000 coffee cups. And that's pretty much all I need here. Okay. So now let's go to my ledger account so I can update my supplies that I have acquired. So here's checking. Accounts receivable. Okay, here you go. Business supplies. So here you go. Medium coffee cups. Okay. I bought 1,000 cups at 0.05 cents each. Okay, post reference General Journal 4 for a debit amount of $54.12. So therefore, that's my account balance. My large cups are right after. I'm gonna put the same thing, except this is 1,000 cups at 0.75 cents each. For 81.19. It's up to you if you want to say plus tax in here. Okay, this one's straightforward. Okay. And then last but not least, we need to update our credit card because we charged more on it. So this time, we went to restaurant supplies and we purchased 2,000 coffee cups. General Journal number 4, and I charged my credit card for $135.31, which this should bring my account balance now up to $320.31. Okay. And of course, we dealt with a vendor, right? We went to a physical store. We need to record that this transaction has happened because what if we need to return the cups for any reason, right? Then we need to go and grab the receipt and then return it and then update our subsidiary ledger for that. Here you go, restaurant supplies. 1,000 medium cups at 0.05 cents each, which you could put the total amount is $54.12, and 1,000 large cups at 0.075 cents each, which gave you a total of $81.19. So in case you do return it, that's the amounts that you're going to get back. No receipt number here, General Journal 4. Right, the amount that was on my receipt was, I'm also going to make a note here that I paid with a Visa credit card. That it was $135.31, and of course, we paid with our credit card. So therefore, I owe restaurant supplies nothing for this transaction because I paid with the Visa credit card. Okay? Is everyone okay with this transaction? Okay. Last but not least, we have an owner's withdrawal of $1,500 from the bank. So in this case, how are we going to journalize this? The owner withdrew from his own company. The owner,
Teacher, from the
yes,
bank means checking
yes.
the credit side. Yes.
Mm-hmm.
Owner withdraw.
Yes.
Yes, you
Uh-huh.
said
Okay.
this is a debit account.
Yes.
But in this action, teacher,
Mm-hmm.
doesn't affect on the capital.
Yes, 100%. But we don't
Okay.
we don't adjust the capital until the very end. Okay? So in this case, we have an owner's withdrawal, which is a debited account. And because we took the money from the bank, it comes out from our checking account. Now in this case, right, I would highly recommend the company to write Bob a check because if he's going to go and withdraw it from the bank, he can't just go in and just take it out, right? He can, but what does that propose? That propose a possibility of fraud. So the safest way to be able to do this is to properly write him a check so that he can go to the bank and he can withdraw from it. Okay? So that's the best way to go around this, so because then when he goes to the bank and he cashes it out, right? At least there's a reason why he cashed it out versus going to the bank and just taking $1,500, right? Because he's going to use it for personal. Then you want to make sure that he's paying himself versus him just taking the money. Okay? So in this case, I'm going to have you guys write him a check just to make sure that when he's doing this correctly. So in this case, I'm going to write check number 1513 for the $1,500. And this checkout is to Mr. Bob Jason. Okay, so check number 1513 is going to be the check number. Okay. So here, owner withdraws from company using check number 1513. Okay. And owner's withdrawal. What account number is that?
32,000.
32,000. And where does the money come from? The checking account for $1,500. Okay? And because we reached the end of this, I'm going to go ahead and have you guys also you know, depending, you guys can do this if you'd like. I do it because it keeps my transactions in order, and I know exactly when I stopped and when I started the next set of scenarios. So in this case, I'm going to block off this last line right here and say this is where we are going to create our trial balance. Okay? So that means any transactions prior to this, okay, will be affected. Okay? Okay? If I did not make any mistakes there, then I know that my transactions or my issues with the accounts, that means it must have happened between the second between the 8th all the way to the 14th, right? Because I guaranteed that the very first trial balance that we did, we panned out and got it even, right? We balanced on both sides. Now, that means transactions from the 1st all the way to the 7th is good. It's accurate, right? So if I stop here, right, at least I know if I do get a discrepancy, I must have made a mistake between the 8th and the 14th. So if I had to if I had to fix it, then I know it has to be something within the 8th through the 14th. Okay? So I want you to block this part off so you have a little standpoint here. Okay? So I'm going to go ahead and save this because I won't be needing this until the next time around, because trial balances, right? You just need the ledger account. So let's go ahead and do the ledger account real quick. Okay. In this case, I affected an equity account, right? The company withdrew, or Bob withdrew money from the company. So there you go. Owner's withdrawal. And then you're going to go ahead and you can write something here. You don't have to, because it's kind of straightforward. If the owner wants to withdraw, he can withdraw whenever he wants. Okay. Post reference, once again, we are still on General Journal number 4, and this time we're going to debit the account for $1,500. Okay. And of course, that took out from our checking account, right? And how did that come out? It came out using check number 1513. Okay? So in this case, right, we decreased our money by $1,500, leaving the bank with $4,189.92. Okay? So right now, we're doesn't look like we're doing too well. Okay? And then of course, do I need to update my subsidiary ledger?
No.
No, because this is an internal transaction once again, right? Has nothing to do with any of the people that are involved with my company, right? Has nothing to do with my vendors, has nothing to do with my customers, and Bob is not an employee. He owns the business, so none of those people are involved. So therefore, I don't need to update anything in regards to my subsidiary ledger. Okay? So save your ledger, okay? And now let's go ahead and take out your financial forms for this because now we are done with the journal. We're done with the ledger. Don't need to do the subsidy ledger, of course. This has nothing to do with inventory. So in this case, right, we're going to now complete the trial balance for week 2, okay? Now, I'm going to do exactly like before, okay, where I'm just going to go down the list, okay, and I'm just going to go ahead and mark down what accounts were affected. Okay, so in this case, trial balance number 2. Okay, so we're going to start up from the very top here. And we are going to okay, we're going to go through every single line here. So starting with our assets, our first account that we have a balance in is going to be our checking account. Okay. We have a debit balance of $4,189.92. Okay. Right? Next account we have is petty cash. We don't have any yet. Cash and register, we don't have any yet. And we haven't even opened up their source, so we don't have any customers yet. So no accounts receivable or an allowance for doubtful accounts. However, we did buy some business supplies, right? We bought some medium cups. And this is where you can abbreviate because it's not going to really matter as long as you list out all the accounts on here. Okay. So medium cups, I bought it for, I have a debit balance of $54.12. Okay. My large cups is for $81.19. Okay. I have not bought any sugar or any creamer yet. Nor did I buy any office supplies. Okay. Inventory. Yes, I bought regular coffee. And I bought Supreme coffee. Okay, so my regular coffee has a balance of $200. My Supreme has a balance of $225. Okay. And then now, let's see here. Ceramic coffee mugs. I do have it, but they're periodic inventory, so they're right now currently in my purchase expense account. Okay. Furniture. I did buy some furniture, but right now my furniture account has nothing in it. Okay. However, I have some bistro tables and chairs. For $6,605.08. Okay. I also bought a counter. for $1,193.22. Okay. I also bought a desk set. Okay. For $658.37. And I even bought display shelves for $577.08. Okay. Okay. I have office equipment, right? I have a computer. So we know that we bought the computer and printer together. Okay. My computer right now is 1834.84. Okay. And my printer right now is 378.87. 378.87. Okay. And then of course we bought a cash register for $649.49. Okay. Equipment. Yes, we bought coffee brewers. So you can put brewer. And we have a coffee grinder. Okay. So my coffee brewers, I have 2 of them, giving me a grand total of $4,527.95. Okay. My coffee grinder, right, which we just figured out, right? In this case, I don't have it, right? It's still under miscellaneous expense. So we don't actually have the grinder yet. Okay. We have it, but it's placed somewhere else. Okay. Vehicles. Yes, we bought a truck. Okay. For $32,208.90. Right? We have prepaid accounts. For a total of $66.54.17. Okay. We have some deposits, right? We have some rent. Okay, for $1,700. Okay. When we acquired the business, we acquired it with some goodwill of $2,100. Okay. And of course, miscellaneous expense, which is our coffee grinder. We have it currently outstanding for $3,088.07. Okay. So that was my total assets. Okay. Now we need to move on to our liabilities, which is going to be on the credit side now. Okay. For my total liabilities, right, I have here accounts payable. outstanding for $15,676.40. We also have the Visa payable, right? Outstanding for $320.31. We also have a notes payable, right? We financed our cash register for $649.49. Okay. We don't have any, we have some employees, but we haven't paid for any of their taxes yet or any liabilities that we owe to our employees. So we could skip that whole section here, right? We didn't have any utilities yet either, okay? And nor do we have any unearned revenue, so no prepayments yet. We don't have customers yet. In this case, next one is sales tax. We haven't opened or charged sales tax yet. Interest payable, not yet. And then loans, right? We did have one loan, right? It was for our truck. So we do have a truck loan. Okay. Which was for $29,221.90. Oh, 29,221.90. Okay. And that is my liabilities. Okay. Equity, right? We have owner's equity, right? Equity. What was our original investment? $30,000. Okay? But we also had an owner's withdrawal, right? We end up taking some money away. Okay? For $1,500. Okay? We haven't reached the end yet, so we have no income summary. Okay? Revenues. We haven't opened our store yet. We're still setting up the store, so no sales yet. We don't have any cost of goods sold because that's directly correlated to inventory and sales, right? So in this case, no cost of goods sold. But we did have some operating expenses, okay? Starting with the first one, we had advertising expense. Okay. We had advertising expense with a debit balance of $185. Okay. Bank fees, we haven't done our bank reconciliation yet. Okay. And then we have some business expense. Yes, we do, right? We had the consultation to design our business for $1,000. Okay. We had some freight expense, right? Because we purchased some periodic inventory. So we had some freight expense. Okay. And it's for a debit balance of $100. Okay. Did we have some insurance expense? Yes, we did, right? We had to pay for the insurance expense for the month of June, which cost me $195.83. Okay. Did we have any interest expense? Not yet. Okay. Labor expense? Yes, we had some subcontractor expense going on here. For the $18. $4,290. Okay. Did we have a temporary labor expense? We will when the time comes, but now we don't. Okay. License and permit expense. Yes, we did. Right? License and permit expense for $375. Okay. Did we have a loss on the sale of assets? Yes, we did. Loss on disposal of asset. Okay, for $2,000. Okay. Did we have office supplies expense? We haven't even purchased office supplies, so no, we don't have any office supplies expense. Okay. Payroll expenses. We have our employees, but they haven't started working yet, so no payroll taxes, no salaries and wages or commissions expense. Okay. Did we have a purchase expense? Yes, we did. Right? We purchased coffee mugs, right? For $196. Okay. And no returns yet or discounts. Next one we have is some rent expense. Yes, we incurred some rent expense for $1,500. Okay. Did we have any travel, any utilities, any bad debt, any depreciation or amortization? None. So now we have our, we finished our columns of all of our total debits and our total credits here. So now we're going to go ahead and we are going to sum up our total columns here to get our total debits and our total credits. Okay. So here is all my debits here. Okay. So I have 75,000. So what I like to do here is I usually take my debits minus my credits so I can just see it clearly. I have 0 discrepancies. So my debits and my credits match 100% in balance. They are both balanced. So with $75,868.10 in debits, you also have a $75,868.10 in credits. So therefore, that means we did our accounting accurate. And that means from here on out, the next time I have a discrepancy, right? That means my problem is going to be from the 15 all the way to the 21st. Okay? Cuz everything here is even and it's panned out evenly. So it's clear. Right? For 70,000 $868.10. Okay? And that is my trial balance for week 2. Okay, did everyone else balance as well?
Yep.
Yeah.
Okay, perfect. Okay. Any questions in regards to anything from week 2?